the world's strongest power, and only 20 of us believe America's still number one. What happened to us? That fear is reflected in commodity prices. Look at how gold is reaching new prices, new record prices, and oil touching $90 a barrel this week for the first time in nearly 2 years. People are scared. Let's bring in some experts to help us out. Mr. Gary B. Smith, Peter Schiff, and Chris Markowski. Gary B., my good friend in Washington, pal. We've been talking this for a long, long time. Fear and anxiety in America driving gold prices up. Do you agree, disagree?
Agree with your premise. Agree that now is not the time to buy. Basically, I'm looking at history, Eric. You might not remember. You're probably in grade school back during the oil embargo of the late 70s. But, you know, back then we had a crisis of confidence. Gold hit about $800 an ounce. In fact, it was up almost the same as it has been now, almost 500% in just the past few years above it. And then over the next 10 years, it dropped 50%. Next crisis we had, substitute China for Japan back in the early 90s, same thing. Gold was at about $400 an ounce. Over the next 10 years, it dropped almost 40%. I think the same scenario is here. Oh my gosh, woe is us. We'll never be number one again. I would rather be a seller now than a buyer.
Gary, I'm going to throw this to Peter. After both of those periods that Gary references, Peter, there were periods of good, prosperous times. I mean, the 80s, there was a ton of growth in the economy. That doesn't seem like it's anywhere near what's going to go on going forward. It feels really bad still.
Well, you know, much of that growth was financed by debt, and we're having to pay those bills now. And I still think, as far as gold is concerned, if you're going to compare it to the 1970s, we're much closer to 1971 than 1980. But you asked earlier what happened to America. Well, what happened was we abandoned our tradition of limited government and sound money. That's why we're not number one. You know, on a per capita basis right now, I think the U.S. ranks about 8th in per capita GDP. We used to be number one by a long shot. There wasn't even a close second. I think by the end of this decade, we will not even be in the top 20 when it comes to per capita GDP. And the reason is because we are encumbering our economy with debt, with taxes, with regulations, with government subsidies and mandates. And we cannot be a prosperous economy if we don't have a lot of savings, we don't have a lot of capital investment. We're either going to have a big government and be poor, or have a small government and be rich.
Hang in there, you two. Okay, Chris, I got a bear and Gary B. I got a bull and Peter Schiff. We'll break the tie.
I'm a diversification guy. You can't just be in gold. There's a lot of other countries. He mentioned that the other countries are going to have great per capita GDP. That means you got to be involved in all sorts of other metals. You can't just be involved in one thing. That ends up killing you every single time.
Yeah, but break this tie for us, pal. I mean, a lot of our viewers don't want to hear about palladium, platinum, things that they can't invest in. Everyone can go out the corner and buy an ounce. Here, I have one here.
They can
buy an ounce of gold on the corner. Do you like gold or do you not?
Yeah, I like gold, but obviously it has to make up a portion of your portfolio, not the whole darn thing. I mean, I'm not going to take grandma and stick her entire portfolio into gold. That's not a great idea.
Hey, Peter,
I'm not saying that either.
Are you going to put grandma in gold?
Well, I'd rather put grandma in gold than treasuries or muni bonds, but I don't advise anybody. I don't even have all of my money in gold. I have a lot of my money in gold and gold stocks, but I have other assets around the world. And you know, Gary B., you've been making fun of my gold call for 5 years. You know, it keeps going up. Eventually, look at the chart. You're the chart man. Take a look at a chart of gold. Look at a chart of silver. You got to be a buyer.
First of all, I have made fun of you in the past, and I think rightly so. I mean, everybody has, Peter. But the fact is, I haven't made fun of you consistently for 5 years. We were on this show, you and I, just a couple of months ago, and I was bullish on gold for a trade, I admit, but I was bullish on gold. So
well, it's been going up for 10 years.
I can't be tarred and feathered with being bearish for the last 5 years.
How long were you bullish for the past 10 years? It's been going up for 10 years.
I don't watch gold. Look, at a point in time, I've been bearish. At a point in time, I've been bullish. Right now, for the long term, I see a 500% spike. I wouldn't be a buyer.
What would you be a buyer of then, Gary, given what's going on in real estate? They're predicting record foreclosures in the first quarter of 2011 in real estate. I guess it can't be there. I mean, the stock market up, what, 10% over the last few months? Are you going to be there? Where would you be?
Well, are you talking about for me individually, or if I was advising someone?
Our viewers who are watching right now going, what the heck is going on? I'm lost. Everyone tells me things are so great, but unemployment's 10% and foreclosures are at a record.
I'll tell you what I would advise people. First of all, I think that actually now, I don't think it's the bottom, but now is the time to start dipping into real estate. Honestly, there's just so much. It's only going to go down. It's only going to go down. When I start hearing that, I think, my gosh, now is the time to at least start dipping your toes into real estate, either maybe through REITs or something like that, or
right.
you know, or hard assets.
Let me bring
the
it out
second
to the
of all
panel.
is
Gary, let me bring the panel
go
in
ahead.
here. I want to get the panel in. Go ahead, David. Do you have any thoughts?
Yeah.
We talked about this last night, in fact.
Exactly. And here's where I am for a lot of people. Let's start thinking long term. And I'm not talking traders. I'm talking investors. Need to think long term. I'm talking 7 to 10 year investments. Move a lot of your portfolio that way. And then, yeah, REITs. I'm kind of with them on REITs, commercial REITs especially. That's where I think we're going to come back late next year with some possible trades that are good. But look, we haven't hit the bottom on the housing market yet. That's a scary territory.
Something we set this segment up saying China. Half Americans think China's the superpower. You say you're not so worried about China, though.
Well, I'm not. I think that it's a little bit of hysteria. You can't pick up a magazine in any newsstand without seeing, you know, there's the Red Scare. Here comes China, and like The Economist had like a 12-page report the other day just on China and the military. Now, I know that we should be concerned, but one of the things that we continue to have that other people don't have is freedom, democracy, and in some ways, what China has done is they've recognized the talents of their people, right, and then putting that talent to good use. But they don't respect their opinions, and that's next.
Exactly.
And when they do, then we'll win.
Hang on, guys. Hang on. I'm going to bring it around the panel. Curtis, but China still. Donald Trump, a guy who said he may run for president on this show, says our #1 threat is China.
Slowly I turned. Do we remember hearing this about Japan? Japan was going to surpass us, the Japanese economy, the best. Boom, the bubble burst. And with the Red Chinese, you got a handful. It's like the Wizard of Oz. A few of these cretins control these millions of people who now have the internet wireless. It's only a matter of time before that country goes fully
Is that the internet or is that Congress? Go ahead, Alan.
Technology brings us all together. You're right. That's what brings the walls down. But what is this issue? We're #1. Well, you know, it's like we're a sports team. We're a country. We're not a sport.
Well, I'll tell you what the issue is. Hold on. I'm going to throw it out to Peter. Peter Schiff, you know why #1 matters? Is because when you go to China and say we need to borrow some money or whomever, or Japan or Saudi Arabia, we better be #1 or they're going to charge us a heck of a lot more money to borrow
as I said
that money.
Earlier, we can't be #1 with all this government, all these taxes and all these regulations.
All these wars.
But China's wealth is not a threat to America. A growing China, a prosperous China, is good for America. What the threat is that one day the Chinese wake up and stop giving us their wealth and consume it themselves, because the Chinese have been propping up our economy by supplying us with merchandise that we can't produce and loaning us the money to buy it. One of these days they're going to wake up and stop this vendor financing. They're going to let their currency rise, and that's when the U.S. economy is going to sink.
Well, if they do, hold on, guys. If China lets, so everyone understands this, China lets their currency rise. Right now, they put a ceiling on the currency. If they let it rise, that means the dollar falls further. Hey, Gary B., what about that? Do you agree with that? If China were to let it float, we would have a weaker dollar and stronger gold prices.
I do agree with that. Although one big aspect of the dollar I've always seen is that it really is, I think, at the heart of it, a proxy for your confidence in the economy. Honestly. And I agree with Peter on 99% of what he says, but here's the great thing. We have elections. We can see the tide turning. Yes, Peter's basically of the camp of too much government, we're too big, you know, we're heading toward that socialist realm. I agree with him in that.
Fine.
But here's the great thing.
Fine.
We just had an election. We turned the tide. We're going to have another election in 2 years.
But,
I think the tide will be
but
turned
what
back.
have we
That's
done?
why
They
I
just
agree with
voted
him.
to run the deficit up.
Hang in there. I want to get to Chris before we have to go. But that doesn't, Gary says the gold is the proxy for fear and anxiety and whatnot. But oil, $90 a barrel for the first time in a long time. It certainly isn't because the economy is heated up.
Well, I think it has a lot to do with Ben Bernanke last week in a 60 Minutes interview with the quantitative easers, no doubt about that. But you also have to take a look at the whole picture. Corporate America's got more cash. They got a ton of powder out there right now. If things start to turn the other direction, it can move very, very quickly. Corporate General Electric raised their dividend today. So you know what? Things may start to flip a little bit.
And you know what? Chris talks about a ton of cash, a ton of powder. Things could turn quickly. I'm guessing you mean inflation?
Well, we need a little bit of inflation. Hopefully not the kind that we have right now, which is oil and food.
It's like getting a little bit pregnant.
David, what about Ben Bernanke? We talked about that as well.
QE2 definitely. No, well, go ahead. Finish your...
No, my point is you can't turn that inflation boat around quickly. That's one that is the big boat.
You know what you're doing? You're playing poker, and you don't even know what's in your own hand when it comes to QE2. 5 cards. You only know what 3 of them are. The other 2's that.
I
shoe
still
that's
think the
gonna drop.
QE2 is just keeping the bank solvent for the most part. The money's not getting out into the system.
Banks are solving. Are you kidding me?
No,
They're rolling in
no,
cash.
they're not.
We
No,
have to leave
not
it
with the
there. I want
real
to say
estate
thank you to Gary
portfolios.
B.
All the banks are insolvent.
All right, we'll talk about that next time. Peter Schiff, Gary B., and Chris Markowski, appreciate you guys. On the heels of the WikiLeaks mess, a cyber hacker takes down, get this, takes down